Welcome back, Next Level Tribe. This week is set to be a really interesting one for the markets. We have the US elections just around the corner, and there are also some major economic reports coming up that could shift the market as well. In this video, I'll be breaking down some of these events, what it actually means for the US dollar, and in particular, the gold market. We will also be looking at some history, what's happening now, and also what potentially would play out based on the past trends. So let's get started. First up, we have the upcoming major events like the US elections on the 5th of November and also the FOMC meeting on the 7th of November. This election cycle is already causing a lot of uncertainty in the market and people aren't sure what's coming. They usually turn to the safe assets to protect their investment. So that's why we are seeing more interest in the US dollars and also gold right now. Both are seen as a safer choice when things are feeling a little bit unpredictable. So, why is there so much uncertainty around this election? Right now, the polls are tight, and prediction markets show Trump with a slight lead. If he wins, there's a strong chance that we'll see a renewed focus on the US China trade tensions, which could also affect the US dollars and the gold market as well. Trade tensions typically pushes people towards the US dollars for stability, while gold also could see a rally as a hedge against any potential disruptions. There's another big factor. So Trump has also proposed a $7.5 trillion tax cut plan. Analysts actually suggest that this could significantly increase the US debt if implemented. Now, when the debt goes up, it usually pressures the dollar over the long term. This could also make gold more attractive as it tends to hold value when the dollar weakens. So, if this election were to lead to a big spending expectation, we could also see a steady raise in the demand for gold as people are preparing for a potential inflation. All these factors, tight polls, potential policy changes, and fiscal uncertainty are driving what we call the defensive market. But what this really means is that essentially that's when investors move their money into assets that can actually protect them against any sudden swings in the market. Right now, what we are seeing a lot in the defensive market is in the form of people buying up the US dollars and gold while selling off the Chinese yuan. The idea here is to embrace any election surprises. With the polls being so close, gold's role actually acts as a safe haven that keeps growing stronger. Investors are more likely to hold gold just in case any major shifts happen in the post elections. They might shake up other parts of the market. To get a better idea of what could happen, let's take a look at how gold has reacted in the past elections. Historically, gold tends to rally during the times of political or economic uncertainty, especially when the election results are unexpected or delayed. So in the 2012 elections where Obama versus Romney, the election was actually more of a stable and because both candidates actually present a relatively predictable policies in the midst of an economic recovery from the 2008 crisis itself. Gold price actually remains flat before and after the elections, with a slight 1% increase reflecting a low level of market uncertainty. So the overall gold market was a ranging market trend itself. Okay, as for the 2016 elections where Trump versus Clinton, the market was a little unsettled ahead of the election due to Trump's unpredictable stance on the trade and foreign policy. Gold increased by 3% before the elections and as investors actually prepared for a potential uncertainty. Upon Trump's win, right, gold actually spiked about 4%, but then it dropped by another 5% in the subsequent weeks as the market confidence returns and the US dollars were to strengthen. In the 2016 election, gold actually spiked and dropped. And of course, on our most recent US election in 2020, it's in the midst of a COVID-19 condition as well. The election was marked by the high contentment and delay in mailing ballots due to the COVID-19 lockdown. So it actually extended uncertainty for days, and the US economy was still under pandemic pressure, adding on to the market volatility. So leading up to the election day, gold actually saw a 3% gain as investors actually hedged against the potential volatility. And following the Biden's declared victory, gold initially dipped as uncertainty cleared, and then it rose again by 6% over the next few weeks. So gold market in that year, it actually went sideways after the elections and then eventually go towards the uptrend directions. You might be wondering right now, what does this history actually tell us, right? In general, gold tends to perform well when the elections are uncertain and when there's a talk of big government spending, as we are hearing right now. And if we see similar trends in these elections, these upcoming elections, We could also see a rally in gold price, especially if there's like more talks of the stimulus or fiscal spending. Now let's take a look at the major economic data releases coming up this week. This report actually gives us a snapshot of the US economy health and of course how they could potentially affect both the US dollar and the gold market. We have jobs, job openings, and consumer sentiment on the Tuesday, ADP employment on the Wednesday, and also the core PCE on the Thursday, and another big one, which is the non-farm payrolls on the Friday itself. These are all critical indicators because they show us how the economy is performing in terms of job, consumer confidence, and auto spending. These are all very important news as if the reports actually shows a strong economic growth, we might see that the dollar strengthen, which could also lower the gold's appeal in the short term. On the flip side, if the data were to be weakened, if the data reported is weaker than expected, it could build expectations for the Federal Reserve for a rate cuts, and the rate cuts typically weakens the dollar, which makes which make gold more attractive as an alternative investment. So in general, a strong data would relates to a strong US dollars, and when the US dollar is stronger, it will lower the gold demand in the market. The opposite side is true, where a weaker data is presented, a rate cut potential will happen, and that will actually increase the gold demand in the market. The possibility for gold from here onwards. If the election outcome is delayed or heavily contested, we could see a quick rally in the gold as investors look for a safe haven. This has also happened before in the 2000. And of course, there's a chance it could happen again if elections was to get complicated. But of course, overall, for the year of 2024, so far, gold has been seeing a very strong trending on the bullish side as well. As you can see on the chart over here, it has already moved up 33.06% so far. In the long term, gold's path will likely depend on whether we can see a big spending policies like Trump's tax cut proposal. If these ideas start to take shape, it could put the pressure on the dollar and also drive up the inflation, which is a positive scenario for gold. But if we get a clear outcome and also more economic stability, we might see a gold stabilizing and also or might even pull back slightly after the initial rush. So in summary, the US elections and this week's economic data could bring a lot of actions to the market. If uncertainty sticks around, we are likely to see the demand for both gold and dollar to continue to stay high. Do keep an eye on those economic reports that I mentioned earlier on and also any election updates. They are likely going to be the main drivers of the market this week. And of course, as we all know, amidst all of this uncertainty, gold still remain relatively strong. Thanks for watching this short market updates. And of course, do let me know in the comment below what do you think will be happening this week's data releases and all the big events that's gonna happen. And if you find this video useful for you and you would like to see more of such content in future, do remember to subscribe to our channel and hit the like button for this video. And until the next time, stay informed and stay prepared.